How are you, Publius?
Doing well, Mod. How are you?
I'm doing well here, thank you. Publius, maybe I can start this class with a question, and that is there a difference, do you think, between unique sowers and unique stockholders? And if yes, how does that, let's say, impact, maybe the how the protocol functions and what the protocol is, maybe from a decentralized point of view, let's say. So very quickly we can say that if we only have one stockholder that owns all of the protocol, then that is it makes the protocol to an extent centralized. But does it matter if all of the protocols that?
It probably, just from the nature of the system, it's on the one hand, it's possible that when the pods become harvestable, they're all sold, such that there's a true bifurcation between sowers and silo members. But in reality, it's much more likely that people lend beans to Beanstalk, and when they harvest, they sell some of them, but also deposit some portion of those harvestable pods into the silo, and therefore there's some high expected correlation between the distribution of lenders in the field and the distribution of silo members over time. So I feel like a wide distribution of sowers and silo members are both important to the success of Beanstalk, but it's more that the low concentration of ownership of the silo is important. And if there's only one or a few lenders in the field in general, then it's unlikely that over time the silo will remain significantly low in concentration of ownership.
Okay. So I think what you're saying is that not say the risk, but the downside of having very few sowers is that it may impact the silo distribution in the future once those pods harvest. Okay, my follow-up question is on also in the field. Do you think what if the field is too slow in adjusting the temperature? So if it's too fast, we understand what the risk that may come with that, with the temperature rising too quickly. If it's too slow and it takes a long time, and if we take it to the extreme, and maybe it may never attract anyone in our lifetime, but it will attract the next generation or so. Is there a real risk in the field being too slow?
Well, the field moves pretty quick in the grand scheme of things, right? At 3% or even 1% an hour, we're talking about every month it's changing the interest rate hundreds of percent. And therefore, over a couple of months, the interest rate is going to change very significantly. So don't think that it's realistic that under the current implementation it moves too slow. I think it's much more possible that it moves too fast, such that when there's nothing substantively changing from an economics perspective, the protocol starts to bid at a crazy high interest rate. Like, for example, right now, the price is at 97 cents or about there. And there's a question as to whether or not it's worth Beanstalk paying any additional premium in temperature over what it currently pays, as opposed to just having it wait right now until the stock gauge system is implemented, because clearly that will also have some effect on peg maintenance. And so there's a question as to whether or not the temperature can change too fast, just as much as whether it can change too slow. And I think that it's much harder for it to move too slow in practice than it is for it to move too fast.
Yeah, I think what I meant is by too slow is not that it's too slow now. I agree with you that you can argue that it's fast. What if we reduce it? So instead of 1 and 3, maybe let's say it's half and 1 or something like that.
You're talking about the stock system or the payment?
No, the temperature. So we make the temperature increase even slower, or the change is even slower than what it is now.
Yeah, I think that's worth considering. Ultimately, it probably makes sense to have as has been discussed recently in other, I think maybe it was the most recent class, there's some question as to how much time spent away from PEG, as well as the price differences from PEG, or also the debt level, and the time and magnitude of the deviations of price and debt level from PEG. Those should be considered in, or probably be considered in some capacity in the ultimate PEG maintenance model that Beanstalk employs. But for the time being, there's still some architectural work that needs to be implemented in order to facilitate the changing of stock and seeds based on some gauge system.
Okay. Do you think if it's too slow in increasing, so let's say it increases at 0.01 instead of 3, and that makes it like really slow, is there a risk if it's too slow in increasing the temperature that maybe silo or bean holders would give up and just exit the system?
Certainly.
Okay.
Yeah, there's at both extremes. If you make the field worthless or effectively worthless, then yes, you'd expect Beanstalk to suffer as a result of that. Given that the field really is the core of the PEG maintenance model, as much as converts within the silo have started to have an impact, the core of Beanstalk's ability to maintain the PEG really does derive from its ability to borrow in the field. So if the field is rendered useless through changes to the temperature changes, it's unlikely that Beanstalk will be unharmed.
Okay. All right. That's a question that I had. We can stop here to give it a minute and see what questions we have from the audience. All right. Jesse or Jesu asks, when can the project be considered complete code-wise? They worry that all the costs will deplete the remaining liquidity before the crypto market revive. And I think what by the cost, they mean the cost of development of the protocol.
Well, there are two separate questions in theory, or maybe one is a question, one is a comment. When can the project be considered complete code-wise? Well, there's a question as to what it even means for the project to be complete. On the one hand, Beanstalk could reach a point where the PEG maintenance model is implemented to a point where its upgrades are permissionless, or the governance system that supports them don't require BIPs, so it can be somewhat passive, and all of the Solidity code that supports that system has been implemented. That's one way to consider the project being completed. Another is that there are related pieces of Solidity code, like wells, like pipeline. There are probably a couple other pieces to the financial stack that without Beanstalk, it's unlikely to create real utility or fulfill its true potential. And so another way to define the project being complete is all of the Solidity code necessary to implement some sort of core DeFi stack that integrates Beanstalk. That's another way to consider the project complete code-wise. Now, there's all sorts of other work in terms of indexing the on-chain data and creating, for example, an SDK to build on top of the on-chain information that also probably needs to exist in order to make it really easy for businesses to start to build on top of the Beanstalk tech and financial stack, if you will. But it's unclear how much of that development needs to be paid for by the DAO. It's also unclear how much of that should be paid for by the DAO versus through other funding means, or what is potentially available to those people that want to build some of the pieces of this stack. It's not exactly clear to us what the finish line looks like, but it's at least the path towards the finish line appears to be being more and more defined. But it's worth taking a step back here and realizing that when we originally deployed Beanstalk, we thought the work was done and that was it. And both in terms of improving and working on Beanstalk, which now we're in year 2 or year 3 even, since we originally started working on Beanstalk in any capacity. And there's still a lot of work to be done, or that can be done. And there's also lots of other related work across the DeFi stack that originally was not at all on our radar, but now seems highly pertinent to ultimately completing. So yeah, unclear what this project really refers to. If it's just Beanstalk, then it's probably the first thing that we mentioned. If it's the things that are necessary for Beanstalk to succeed economically, it might be a larger definition of that. With regards to the comment that you worry about the cost depleting the remaining liquidity before the crypto market revives, to some extent, it's a very reasonable concern, and there is an infinite liquidity. Would just would comment that if you look at the history of the DAO and the minting of beans by the DAO to fund certain projects, it seems like at the moment the minting is lower than previously relative to liquidity, and that the returns from the minting seem to be much higher on a bean per bean basis, if you will. So a lot to look at from a value perspective, at least if you're trying to understand what the beans are being spent on and how much value is being returned for them. Feel like now more than ever, there's a lot of evidence of that. As a member of the DAO, I've been very pleased with the way all of that's been going on, and yeah, it's unclear what the finish line looks like, and to some extent, there may not be enough liquidity to fund everything, and that's perfectly okay. And that's one of the nice things about the DAO only approving quarterly budgets historically, is that it's a very short leash, and there's not some sort of infinite printer in perpetuity or tax in perpetuity on the system to fund development forever. These are things that we've advocated strongly against in the past, and therefore this is a very healthy question to be asking on a recurring basis.
Publius, can you think of another project or protocol or anything in general that you think can be an example of what we can say is complete, or this is it, the job is done?
Of another protocol?
Sure.
Well,
is like Bitcoin one of the things that you can consider, even though
there's still work being done on Bitcoin, so it's not really fair. I guess the real point is the level of changes that can be expected, right? What is the socially acceptable, like what's in the Overton window of things to change, if that makes sense. I think that's something that is more of a social thing than anything. So yeah, interesting question.
Yeah, and Jesse follows up and says that they hope that there is a goal somewhere after which the project will be put into hibernation mode to save the remaining liquidity. And I think the answer to that, Publius, is what you mentioned or said, and is that the BIPs or the budgets are approved every quarter, so the DAO has the opportunity to reassess every quarter and make a decision from there.
On this end, would think it would be incredibly foolish for hibernation mode to happen, whereas there's certainly a point at which there's a lot less development that needs to happen. But the idea that the market is going to dictate how much development is happening is really foolish from our perspective. The goal is to build during the bear market, not try to build during a bull market. That doesn't make any sense. You build all the time, and the market does whatever it does. They're independent.
Okay, I see. Okay. Bacchus asks, I've been questioning whether we should focus so much on entirely new business and products being built on top of Beanstalk tech stack. It seems like there's a lot of existing projects that could partner with and integrate that already have users and traffic. Might it be a good idea to step up biz dev efforts rather than counting on Beansprout to incubate businesses that drives growth?
Would be curious what are the projects that you're talking about, Bacchus? Because from our perspective, the current capabilities in the EVM for DeFi are lacking, to put it lightly. And the projects that have some liquidity and features are not interested in integrating Beans in our experience.
Terboy asks, is there any initial feedback on the performance of Root?
From us? Well, the Root token has, I think, a couple $100,000 of liquidity. There's been a decent amount of demand for Beans to bet with Roots in the Paradox pools. That's been pretty cool to see some sort of demand for Beans because of the utility of Beans as opposed to purely speculative demand, even if the utility is to speculate on sports outcomes. It's not speculating on the future demand for Beans. So that's pretty cool. And otherwise, there's a lot of work that still needs to get done ultimately for the real utility of Beanstalk to be realized. So hopefully the fact that the Root token was deployed and immediately another protocol decided they wanted to use it, that's an indication that the economics here are pretty strong. But beyond that, don't think there's too much to read into it at this point.
And the Bean Pod has one of the episodes is with the founder of Paradox, and in it there's a discussion or they talk about how the Root token, which of course is a silo deposit wrapper, enables and facilitates bets that you would otherwise expect them to be too expensive or unrealistic to happen. So if you're betting on something that will happen 6 months down the road, it's too expensive to lock, capital waiting for those 6 months and then figuring out what is the outcome. So something like Root enables that, and that is pretty exciting to see. Okay, we have a few comments or thoughts on spending, let's say, resources and capital on business development or not. But otherwise, we're at the end of the town hall chat.
Well, Jesse comments that Beanstalk can't revive the DeFi space single-handedly, save the resource and life for the next bull market. Fundamentally disagree. If you look at the structure, if you're really paying attention to what's unwinding right now and put FTX's fraud aside, there's been, over the past 5 years, basically an immense amount of leverage built up in the crypto ecosystem, largely deriving from the GBTC trade. And there's basically been no real innovation in DeFi whatsoever. So to some extent, if we go back to when we originally were working on Beanstalk, we thought the only thing DeFi was missing was the currency. At this point in time, I feel like that's not the case at all. And DeFi is missing basically everything. And currently DeFi is good for almost nothing. And that's why people are stuck using FTX and Binance and other centralized exchanges. So just strongly disagree with that and feel like Beanstalk facilitates, for really the first time, any sort of real economic activity on top of Ethereum. And in order for that to actually be realized, there's a lot of other tech that does need to get built for Beanstalk to actually work. And therefore, again, this goes back to the question about what does it mean for the project to be completed. Even if Beanstalk has a great peg maintenance model, if there's no tech that facilitates people to use Beanstalk, because DeFi doesn't support deposits and pods, and beyond that, the current AMMs suck. There's no real reason to expect that Beans will actually get adopted for any reason other than speculation. And if you start building once people are speculating, that's too late. So the goal is to create real utility and have people using Beans because there's utility created by Beanstalk. And this is very much a chicken and egg. And there are people that are currently working on laying eggs, even though they're not chickens. And that's easier said than done. But that does cost some money. Feel like the amount of development work that's coming out of the Beanstalk ecosystem is amazing. And beyond that, this is not going to happen overnight, but it's also not going to take 10 years. So there's just a question as to optimizing for time and money, and agree this is a very healthy conversation to be having, but don't think that the goal is to just not build the tech that needs to get built. The goal is to build it as efficiently and quickly as possible. And those are two different things.
Publius, and this is maybe more of like a philosophical question, I guess. Where do you think the use of or maybe it is both, it's not one or the other. Do you think the majority of the use case of Beans would come from its positive carry nature, or from it being, let's say, censorship resistant or permissionless?
I think it's all in one. Ultimately, the currency, the cryptocurrency that will bring in the age of DeFi is it's probably going to be a single currency. There's people working to build a Bitcoin-based economy. I guess in theory, there's people building an Ethereum-based economy. We would argue that the tech that would support a Beanstalk-based economy is the exact same tech as the tech that would support an Ethereum-based economy, and therefore really just an economics question that the market will sort out. But the concept is that the choice of the market of the best currency to use is probably going to be a winner-take-all, or certainly a winner-take-most situation. And there's no real economic activity happening on top of Bitcoin or Ether at the moment. And we would pose the question, why? And we have a thesis, which is that, or the original thesis was that there was a too high carrying cost on low volatility blockchain native assets. But currently the thesis is that basically none of the financial primitives that are needed to facilitate real economic activity are competitive with centralized alternatives. So the censorship resistance and the positive carry both don't even really get included until the currency can actually be used for the same things that off-chain currencies can be used for. So I mean, you're asking more of a theoretical economics question as to what's more important. We don't even know and won't have a chance to find out until Beans can be used for everything you can use dollars for.
Yeah, and I think the other differentiator as well is it for the currency to be stable when we were comparing it to Bitcoin and Ether.
But the market will decide that, is the point.
Yes. Okay, I see some folks typing. Let's give them a minute and see their questions. So Wendy has a comment followed with a question. It says, the whole team is doing an amazing job. Congrats on all the progress so far. What's the general sentiment of the team? Do you have a comment, Publius? What do you think?
Again, not a fan of the concept of the team, even though as a Michigan fan, Bo Schembechler, the team. So counterintuitively love the team, but again, the team is a little bit too vague. I think a lot of people are very excited about the work that they're doing, but a lot of people are also very, very disappointed and disheartened by the chatter in the Discord, which is really the only place that the community interacts with the people that are actually doing lots of the work. And I mean, at least on this end, feel like the chatter in the Discord is just really demoralizing and depressing, and feel like that sentiment is shared by almost everyone. So on the one hand, people love the work, and on the other hand, it's really, really painful, frankly, to spend any time in the Discord. And a lot of people are paid to spend time in the Discord and answer people's questions, and therefore that's that can be quite painful.
And while we're at it, Beethoven dropped a new song today. That's in the announcements. Maybe I can drop a link in the town hall chat as well. And that's a light-hearted song. Quasimat asks, can you say more about why AMMs suck currently and what improvements should be made?
So the real issue is from a user experience perspective. If you're providing liquidity, on the one hand, you're basically guaranteed to be experiencing the worst flow possible because you're by definition like a dumb trader if you're providing liquidity. The AMM is just there, independent of the market movement. So you're always getting traded against based on what the actual market price is. And separately, in order to update your positions, you need to update send a transaction. So it's very expensive to provide liquidity, and providing liquidity is not profitable. So therefore, it's really not. It doesn't make sense to do.
Farmer then asks, saw something today about Brazil creating a CBDC in 2024. Do you think CBDCs will be in direct competition with Beanstalk?
Direct competition, hard to define what that means, but I feel like given that Beanstalk is already basically competing with the US dollar, that applies to any CBDC.
John, you shared a comment saying that he generally comes to the Discord for good vibes and a good conversation, and he agrees that when when it's below peg, people are, or let's say some people are pissed off. So Publius, going back to the AMM bit, and you said the user experience, where currently the way they are today is that you're just trading against a curve, let's say. Do you think this is the next, let's say, like improvement to an AMM, or do you see something else that could be take AMMs to the next level, let's say?
Well, the basic thing that the AMMs were originally solving was the need to frequently update your positions, but that creates the toxic flow problem. So the question is whether you can create some sort of order book that is updating without the need to send transactions. So wells are in theory being implemented in such a way where the liquidity curves that are being provided are the result of functions that take in some inputs, and those inputs can be some oracle price. So you can actually bid a pricing curve or some order that is a function of the price itself, and therefore you can basically prevent yourself from having any toxic flow when providing liquidity, and provide liquidity in a truly customizable fashion. So that's the hope of Wells. It's still unclear how long the fully fledged version is away, but hoping that's within the next couple of months that'll be ready to go, and feel like that'll be a major improvement in DEXs in general.
Thank you for the answer. And John, you followed up by saying that it's encouraging, or it's great seeing that the DAO votes together. And I agree with that. That sometimes it may be a few members who have loud voices, but the real voice at the end of the day is can be measured, let's say, in voting or in governance. Okay, we're at the end of the town hall chat again. Let's give it a minute and see if others have other questions. In the meanwhile, Publius, maybe we can talk a little bit more about CBDCs. What value will a CBDC add if it's on chain? Is it just that now you can use it on chain?
Now the Federal Reserve can prevent you from spending money at Starbucks because they don't have a good ESG score.
I meant as you as someone who is on chain. Why would you buy a CBDC? The point of let's say that
I mean if you want me to steel man the argument, it's because it's one step better than USDC, where you still have exposure to censorship by a centralized party. You prefer to be censored by the government than some company, and there's no risk of default in the CBDC because it's issued by the issuer of the money itself as opposed to issued by some centralized company. So there's some benefit over current solutions, but there's a lot of potential downsides associated with the CBDC as well.
And why use the blockchain then? Can't you just like send money over, the same way you do it?
Unclear why you would need a blockchain in that case. But if you're using a blockchain, it may be helpful to have dollars on chain or some currency on chain issued by the central bank, but unclear if there's a Venn diagram intersection there for what would actually benefit users of blockchain technology and what the governments would allow the CBDC to be used for. Unclear.
All right, let's give it a minute. Okay, I think we may have run out of questions today, Publius. Any closing? I guess it is, if all questions and are answered, then that is a good thing. Any closing comments on your end? What are your thoughts? What are you thinking in general?
There's really no way to know if the stuff that is being built is the right stuff. And if it's not, even if the core peg maintenance model of Beanstalk works, it's unclear what Beanstalk is good for at this point. And it may just be that it's too early, but there is going back to the question about the temperature moving too far, it's like, well, if it takes 3 years for Beanstalk to have real utility, what's the temperature at which Beanstalk will have in 3 years if there's no real utility for beans? Unclear. What's the size of Beanstalk at that point? If it's all speculative demand, there's going to be a lot of volatility there. Whereas if it's all utility-based demand, there's probably going to be a lot less volatility by comparison, even if it's still a lot of volatility. So from our perspective, it's clear that DeFi isn't ready for Beanstalk yet. And therefore, there's a lot of work within DeFi in general that needs to get done. And we're encouraged by Root, and there are a couple other projects that are hopefully going to get going soon or get announced soon, or don't really know what the right thing to comment on is, but are quite encouraged by the Beanstalk ecosystem or the Beanstalk brain trust and people stepping up and trying to build cool shit. And we're excited to be surrounded by people doing that and happy to just be a part of it.
Thank you, Publius. And I believe many of the farmers, or most of the farmers, if not all, share the same sentiment. Thank you all for joining us in today's class. Thank you, Publius, for taking the time to answer all questions, and we'll see you guys next week.
Take care, man.